So we get a lot of calls from customers and clients about down payments. How much do you really need to purchase a property? A lot of people wonder, do I need to have a 20% down payment to purchase a home? No, you don't, but there might be some really good advantages for you doing so. I recently sat down with one of our preferred lenders, Andy Pendleton, and I asked him a lot of questions about down payments, whether or not a 20% down payment is really necessary, and what are some alternatives. And here's what he had to say.
So 20% down, there's a common misconception that you have to have 20% down in order to purchase a home. And that's not the case. Showing that you do have 20% down is going to work wonders for you. The sellers, the listing agents, they love seeing that higher equity position. From a lending perspective, if we're looking at numbers and we show you a 20% down payment and a, let's say, 5% down payment, and we compare the two, and let's use $500,000 as a measuring point. A $100,000 down payment versus a $20,000 down payment. If you're able to hang on to 80% of your funds where those are out earning interest, you're probably going to be making more than you're spending. So getting the full analysis of where your money's going and how your money is being used is always going to be advantageous.
What is it about having that 20% down payment from the lender's perspective that they think is such a great thing to have?
They see 20% down as a extremely qualified client. I hate to use the terminology of that's the way it's always been done, but
that's the way it's always been done?
That's the way it's always been done.
Okay.
So at that 20% threshold, you do get rid of mortgage insurance or private mortgage insurance, whatever loan program we're looking at, and it opens up the door for you to not have that escrow account. But mainly mortgage insurance is what people have that perception that mortgage insurance is just costly. It's super expensive. I don't want to have to deal with that.
So right now, the average home price in DFW is $400,000,
Okay.
right? So if someone's putting 20% down, that means they're putting $80,000 down and they're carrying a mortgage of $320,000.
Correct.
If someone were to put, say, 10% down, so they're only putting $40,000 down, they're carrying a mortgage of $360,000. What is the amount that they would probably have to pay in this PMI premium that they've got to pay?
Mortgage insurance is based on two different factors. It's based on your down payment and your credit. The higher your credit score, the less mortgage insurance is going to be. On average, for a $360,000 home loan with good credit, probably be seeing somewhere in that neighborhood of $50 per month, maybe less.
Okay, so that doesn't seem like that much.
It's really not.
Right.
And so really, with the way that homes are appreciating in DFW and nationwide, honestly, I've got $40,000. I don't have $80,000. What's going to be your cost of waiting? Is a $400,000 house today going to be $425,000 next year? Is it going to be $450,000 next year? Biting the bullet and taking the $50 per month now may be advantageous to many, many buyers out there.
There's a cost-benefit approach to whether or not you should go ahead and put the 20% down, whether you do or do not have it. Correct?
Absolutely.
Okay. Are you kind of going through these different what-if scenarios with people and running these cost-benefit scenarios?
We definitely talk about, what do you feel comfortable with as far as your monthly payment? What do you feel comfortable with as far as your cash due at closing? Many, many people will soon find that they have a comfort level of $2,500 for a monthly payment. Well, what they're finding is when they put 10% down payment and their monthly payment only goes up $150, $100 per month, but they're hanging on to $40,000, comes out to a major benefit for them, especially with houses that may need work. Now you're reinvesting into the house to improve it to the way that you want it.
We pretty much can say definitively that 20% down is the gold standard. It's great to have 20% down as a borrower. So what are some of the alternatives that people have to just going this traditional route?
With a conventional loan, you can go as little as 3% down payment for a first-time home buyer. Typically, I recommend if we can do the 5%, let's do it. It just helps from that mortgage insurance standpoint and from an interest rate standpoint. FHA is 3.5% down payment. And then there's VA loans for our military is a 0% down payment. For USDA, that is geographical location of the property dependent, but it is also 0% down. Many options, whether you want to do a 3% down payment, a 20%. I like to look at the whole picture and not just tell you, okay, here's your option, let's go buy a house.
Andy and I got to talking for quite a while, but one thing that I really wanted to know was, if you don't put 20% down, do you get a worse interest rate?
A common misconception is that 20% down payment automatically reduces your interest rate. Having mortgage insurance gives investors somewhat of a security blanket. They feel good because they can always rely on that mortgage insurance to recoup those funds. You actually get very comparable rates in comparison from 20% to less than 20%. I would recommend to any borrower that's thinking, I need to wait until I hit that 20% threshold, look at the other side of it. A $400,000 house today is not going to be a $400,000 house a year from now.
Not likely.
Absolutely.
Not likely.
I mean, now if we're looking at a $450,000 house a year from now, your 20% down payment that you're saving up for your savings account keeps needing to grow at that point.
One other major benefit that we know for home buyers in today's market is when you're putting 20% down or more, you look very favorably to the seller of that property. I know just anecdotally from working with sellers, when we have a bunch of offers, we automatically start looking at the people who are cash buyers or putting a lot of money down, like 20% or more. Those are the people that we look at first.
It's all in the presentation of your offer. If you have the ability to go to 20% down, even if that's not your anticipation, I would highly encourage you to present an offer with a 20% down payment. And later on, we can look through the numbers and see what ultimately makes the most sense.
So the bottom line is, no, you don't have to have a 20% down payment. In fact, you can have much, much less than that. And if you're a veteran or if you're doing USDA, 0% down payment is all you need. If you'd like to know more about what it's like purchasing a property in the Dallas-Fort Worth area, if you've never bought a home before, or what kind of different loan products there are out there, give us a call at our office. Our number is 469-998-3322, or you can visit us on our website at mydallashomefinder.com. We look forward to working with you soon, so thanks and happy buying.